I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. And we saw some sort of a red wave today, really not just in the agricultural sector or the grain markets, but really in the broader complex of indices, energies, metals, etc. Some of that on the back of the US dollar really surging higher today. But also we've got the end of the month coming up, which often leads to some position squaring, some long liquidation on markets that have been rallying. And then, as we all know, we've got an election next week as well. So a lot of uncertainty, kind of a sell first, ask questions later for a lot of markets out there. But for corn, I think a lot of the negative price action really started yesterday. You can see here that we tripped out above the recent highs, made new highs for the move, and really couldn't sustain that momentum and encourage new buyers to step in. And then we saw pressure throughout the session, and the volume started picking up on that pressure too. More volume than we saw on the last push higher, which indicated a little bit bigger of an urgency to sell. And obviously today, with everything going on, coupled with yesterday's price action and a stronger US dollar, you saw the selling accelerate. Now, is this the top? Well, I think it is a near-term top, certainly. $4 is going to be a battleground area. This was previous resistance, the breakout point here from October 15th, and obviously psychologically significant. I wouldn't be surprised to see the market break down a little bit below here. And by a little bit, I mean there's probably 10, maybe 15 cents of air below this market. This takes us down to this 887 to 890 area, and this was a big level, really going all the way back here in December and January, breakdown point in February, resistance in March. So a lot of interaction between buyers and sellers down near this 890, 887 area. That's going to be the level we're looking at if the bulls aren't able to defend this psychologically and technically significant $4 handle. Now, in our morning Grain Express that we send out each and every morning, we did go from neutral bearish to outright bearish here this morning before the open based off of yesterday's price action. As you can see here, first support $4 to 405, a break and close below there. Takes us down to that 387 area. We've actually got it a little bit more specific here, 385 to 386 and 3/4. Now, on the soybeans, we also went from neutral bearish yesterday to outright bearish in this morning's report. And let's jump over to the soybeans and take a look at that chart. January is going to be the month of interest here for us with November options off the board. A lot of that volume shifts out into that January contract. So the same type of deal with the corn market. We had a nice grind higher here over the last several months. So one of the bigger moves for this time of year that I can remember, and today was that risk-off atmosphere that really dropped us like a rock. And where is support? Well, 1050 is the level we're looking at and have been looking at. This is psychologically significant. This is the previous highs. So I think the market's going to try to test that level. This is going to be a huge inflection point for the market going forward. If the bull camp cannot defend this 1050 level, we would not be surprised to see this selling accelerate and take us down into the 1020s. The first stop, and really $10 is not out of the question. It's a little bit of a stretch right now because I think the fundamentals are constructive, but certainly not out of the question. And when you get funds extended in their position like they are right now, it wouldn't take a whole lot to get us there. A couple cancellations potentially, not saying that's going to happen, but certainly something you want to keep in mind here going forward as we kind of tread in a lot of uncertain waters at the end of the month and the election as well. Now, wrapping things up with the wheat market. The wheat market rolled over, and as we've been kind of talking about in the morning reports, we've been marking lower highs and lower lows from really our peak here just about a week ago. And yesterday's price action, we had that rally kind of like corn, failed to hold it and closed on the low end of the range. It really led to a lot of weakness here in today's session, taking us down to our support, 599 to 603 and a half. $6 is obviously psychologically significant, but if you go back here, this was the top end from January, and kind of the attempted breakout point here in October, the beginning of October, and then the real breakout point on October 15th. We tested that, held it. I wouldn't be surprised to see a little bit of relief take us up to that 620 level, but we're going to be looking to get back in on some short positions that we reduced today at that level. So those are some of the things we're looking at, and that's what you should be looking at too. If you've got any questions, comments, concerns, give us a call at the trade desk, or you can shoot me an email, Oliver@BlueLineFutures. Remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.